Palantir Technologies and SoFi Technologies have become two of the most dynamic and rapidly expanding technology companies of this era, each fueled by a deep reliance on data-driven software, decision-centered architectures, and advanced automation. Their shared ambition is nothing short of transformative, as both companies work to reinvent long-standing industries by replacing outdated manual systems with digitally powered intelligence-first platforms. Even though they operate in completely different arenas, Palantir in enterprise artificial intelligence and SoFi in modern consumer finance, their underlying mission is strikingly aligned. They both aim to dismantle traditional processes and replace them with systems built around efficiency, insight, and scalability. This common foundation provides a strong starting point for understanding how each company is reshaping its domain and why both have become essential players in the broader technology landscape. Both organizations rely on highly scalable digital infrastructures that streamline complex workflows, enhance decision-making accuracy, and deliver more intuitive experiences for users. Their heavy investment in product innovation, constant upgrades to their technology stacks, and ongoing improvements to their artificial intelligence capabilities ensure that they remain competitive even as market needs evolve. These strengths are reinforced by large-scale, long-term secular forces such as artificial intelligence adoption, a global pivot toward cloud-native tools, and a deepening societal dependence on digital services. These trends are not temporary waves, but structural transformations that will define the next several decades. As a result, both companies benefit from a backdrop of growing demand, widening use cases, and a steady increase in enterprise and consumer reliance on advanced software systems. With this context in place, it becomes easier to explore how Palantir has leveraged its artificial intelligence leadership to generate record-setting performance. At the center of Palantir's remarkable rise is its artificial intelligence platform, a system that has rapidly evolved into the company's core engine for growth. During the third quarter of 2025, United States commercial revenue soared by 121% year over year. This surge was driven by widespread adoption of the artificial intelligence platform, which has become a critical tool for organizations seeking faster insights, stronger predictive capabilities, and more automated decision-making. As momentum increased, the total United States commercial contract value climbed by 342% year over year, while the remaining deal value rose by 199% to reach $3.6 billion. These expansions reflect not only strong customer interest, but also a significant acceleration of platform-wide usage across multiple industries. Customer growth reinforced this trend, rising 45% year over year, and demonstrating that Palantir is not only attracting new business at a rapid pace, but also scaling effectively with existing clients. As this growth intensified, Palantir's profitability profile also reached new heights. During the quarter, Palantir achieved its strongest adjusted operating margin ever recorded at 51%. This figure highlights how remarkably well the company's software-centric model scales as more clients adopt the platform. Because Palantir operates with minimal marginal costs per additional customer, expanding usage directly translates into higher profitability. Generally accepted accounting principles operating income increased to $393 million, while generally accepted accounting principles net income rose to $476 million. Earnings per share came in at 18 cents on a generally accepted accounting principles basis and at 21 cents on an adjusted basis, surpassing the Zacks consensus estimate of 17 cents. These financial achievements underscore the company's ability to maintain strict expense discipline while simultaneously accelerating growth. The company's gross margin remained exceptionally strong at 82%, reflecting the high-value nature of its software-as-a-service business model, which operates with a level of efficiency and scalability rarely matched by other enterprise software firms. Complementing these profitability improvements, Palantir generated substantial liquidity. The company produced $508 million in cash from operations and created $540 million in adjusted free cash flow during the quarter. By the end of the period, Palantir held $6.4 billion in cash, cash equivalents, and United States Treasury securities, giving it a powerful financial foundation to support future investments, strategic acquisitions, and ongoing research and development. This strong liquidity position ensures that Palantir can continue to innovate aggressively while expanding its market presence. As its mix of commercial revenue continues to widen and long-term government relationships strengthen, the company is positioned to maintain durable growth while diversifying its income streams. Palantir's careful blend of bold innovation and disciplined financial management provides a competitive advantage that is difficult to replicate in the enterprise artificial artificial intelligence landscape. With Palantir's trajectory established, it becomes possible to shift focus. SoFi's management has remained laser-focused on technological innovation, using cutting-edge tools to deepen the company's competitive edge and broaden its ecosystem. One of the most impactful developments has been the introduction of SoFi Pay, a service that enables users to send low-cost, fast international payments using blockchain technology. This marks a significant expansion into global financial connectivity and positions SoFi to benefit from the future of cross-border digital payments. Looking ahead, SoFi plans to release a United States dollar stablecoin in 2026, highlighting its commitment to bringing blockchain-based assets into mainstream financial services. At the same time, the company relaunched crypto trading capabilities inside the SoFi mobile application, giving users the ability to buy, sell, and hold digital assets, an important move given the rising popularity of crypto investing among younger consumers. SoFi is also building deeper layers within its platform with the introduction of the artificial intelligence-driven SoFi Coach, an upgraded version of its earlier Cash Coach. This expanded tool will provide users with personalized financial guidance, giving them an artificial intelligence-powered assistant capable of tracking spending habits, monitoring savings goals, and offering real-time recommendations across multiple accounts. These advancements reinforce SoFi's strategy of evolving into a comprehensive financial ecosystem rather than a traditional lender. To strengthen customer loyalty even further, SoFi introduced the SoFi Smart Card, which offers 5% cash back on dining purchases, access to competitive loan rates, and credit-building tools that appeal to a wide demographic of users. These additions help expand customer engagement while cementing SoFi's reputation as one of the most forward-thinking consumer finance platforms in the United States. Marketing initiatives have added further momentum to SoFi's growth. A new collaboration with National Football League Most Valuable Player Josh Allen showcases the SoFi Plus Premium membership and highlights the brand's increasing visibility within mainstream culture. Building on these marketing efforts and product launches, SoFi delivered a standout third quarter that demonstrated its evolution from a digital lender into a full-spectrum financial platform. The company reported adjusted net revenue of $950 million, which represented a 38% increase year over year and exceeded the Zacks consensus estimate by 6.6%. This quarter also marked the company's 8th straight period of profitability, reflecting the strength of its expanding business model. Net income reached $139 million, generating earnings per share of 11 cents, which surpassed analyst expectations by 22%. These milestones underline SoFi's growing efficiency and improving operational performance. Adjusted earnings before interest, taxes, depreciation, and amortization climbed to $277 million with a margin of 29%. Meanwhile, non-lending revenue expanded 57% year over year, demonstrating the success of the company's strategy to broaden its financial ecosystem beyond lending products alone. The lending segment also delivered strong results, generating $481 million in revenue, a 23% increase from the previous year. Total loan originations reached a record $9.9 billion, rising 57% year over year due to heightened demand for personal loans and home loans. These figures illustrate that SoFi continues to strengthen its position as a diversified financial services provider capable of operating efficiently at scale. The company further reinforced its financial standing by raising $1.7 billion in new capital and increasing total deposits by $3.4 billion to reach $32.9 billion. A deposit base of this size enhances the company's funding stability, enabling it to support expanded lending activities without relying heavily on external financing sources. As SoFi continues to scale its financial ecosystem, investor expectations for future growth have become increasingly optimistic. Analyst forecasts reflect this sentiment, providing another lens through which to compare the long-term prospects of both companies. The Zacks consensus estimate for Palantir's 2025 sales predicts a year-over-year increase of 54%, while its earnings per share are expected to rise 78%. Earnings projections have continued to trend higher over the past 60 days, signaling strengthening analyst confidence in Palantir's long-term trajectory. For SoFi, the Zacks consensus estimate forecasts current year revenue growth of 37%, and an earnings per share increase of 140%. Similar to Palantir, SoFi's earnings estimates have also risen over the last 60 days. When examining valuation metrics across comparable companies, UiPath trades at a forward sales multiple of 7.78 times above its 12-month median of 5.86 times. Meanwhile, Palantir trades at a forward sales multiple of 64.36 times, which remains below its median of 69.27 times. These figures help contextualize the broader competitive environment in which Palantir and SoFi operate. Both companies present compelling long-range growth narratives built on strong execution, rising demand, and sustained technological innovation. Palantir stands out for its accelerating progress in enterprise artificial intelligence, a rapidly widening commercial presence, and an increasingly attractive profitability profile. These elements strengthen its leadership position as organizations worldwide adopt artificial intelligence solutions at scale. SoFi, on the other hand, continues to broaden its financial ecosystem and deepen customer engagement through a consistent flow of new product releases that elevate every aspect of the user experience. Although both companies demonstrate powerful momentum, Palantir's faster expansion of its artificial intelligence platform and its strengthening dominance within one of the fastest growing categories in the world give it a slight advantage at this moment. For investors seeking exposure to artificial intelligence and scalable enterprise software, Palantir currently stands out as the more compelling buy. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.